Hey everyone, Tom Gentile. I want to welcome you to Money Morning's Midday Bell. Let me put that bell on there. Glad to have everybody here. Did you miss me? Last week, Monday, was a national holiday, and so the stock market was closed, and there was really nothing for me to be able to report to you, so I took the day off like many of you did too. So we came back from a very, very interesting weekend, and a lot of tensions in the air. Uh, you know, um, it's it's tough coming on after seeing what's happened in the country over the weekend. But the stock market is still moving. There is opportunity out there if you know where to look for it. I'm going to actually focus in two areas. Okay, so I want to talk about the overview. I want to look at stocks, bonds, currencies, commodities, gold, Bitcoin, and then we're going to take a look at Hertz, the bankruptcy. I want to talk about some opportunities there if you know where to look. There's risks there as well. All right. And so I actually had this posted up on as a YouTube video, but I want to go into some details and show you really, for those of you to hear, a real-time look at how you could take a look at the odds, probabilities, etc., whether you're a stock buyer, whether you're a call buyer, whether you're a put seller, if you believe that this company actually has a future. All right. So that's what our plan is for the next half hour. So sit tight, get back in your seat. Let's get going. By the way, I put the link out there to the video that I'm going to be talking a little bit more on. And so those of you that check the chat box out, you can see the link there on the video I stuck out just before the weekend. All right, let me go ahead and share my screen. And here we go. And got the big pointer with me here today too. So before I begin, before I go any farther, just to let you guys know, and I do this on every one of my webinars, and you can see this through the emails that go out from our publisher. This is all educational material. You guys all know that. Stock and options trading has large potential rewards, but also large potential risk. All right. And keep in mind, I'm not an investment advisor. I don't give personalized investment advice. I simply show you how it is that I spot opportunities, create low risk and or high probability trades, and of course, plan them from start to finish. Today, like I said, it's going to be all about the big averages, and we're going to take a detailed look at Hertz, because that was the big news story last week during the weekdays, all right, during the market hours. So we'll get to that in just a moment. Let me slide on over, and there's that YouTube start out. So if you're looking for it, there it is. So let's go ahead and let me log in real quick. And I'm going in tomsoptiontools.com. And what I want to do is I actually want to go to stock charts. And I'm going to go to my stock chart positions. And I'm actually going to load up my stock list. And my stock list today is the big five. And we'll take a look at Bitcoin as well. So here we go. Back again, 100-day view of the market. And again, you can kind of see what's going on is we had those all-time highs near 340. We had the big drop down to 220. 222 was the actual close on this. We've seen that. We've seen the rise where we've kind of had this higher low, higher high scenario, stalled out a bit between mid-April and mid-May, and then we pumped up again to newer highs. And we've been really kind of stalling out amongst this area here the last couple of days. We'll see where this ends up going. All right. Saw the markets last night kind of dropping with what's been happening across the country to a lot of the major cities. All right. And so far, Wall Street's rebounding on this information, whether it's just a knee-jerk reaction today or if this is the beginnings of something new. Obviously, we're going to need more than a week or a weekend to really determine that. But those of you that have listened to me on this broadcast since we started doing this back in March, right? Those of you that started listening to me, I mentioned that this pandemic was going to be a drop down, that we were going to get a rebound. because there was going to be this sense of American patriotism. And that's what happened. And of course, the stimulus checks kind of prolonged that a little bit, and some of the things that came out of Washington. But I also mentioned that typically that patriotism is short-lived, and then afterwards we start to get frustration in one way or another. Now, I had absolutely no way to be able to predict what happened last week was going to be the start of possibly this now divided country. All right. And again, whether that equates into lower lows in the stock market, we are going to see. But again, it's going to take something big to push us up into the 3,100 area or 310 on SPY. So that's going to be a really good hard line area right now. As we've hit the 305 mark, 305 half now, and that's been a hard line for the stock market here for the last couple of days. What is the bond market doing? I mentioned 2 weeks ago, because I wasn't here last week, that bonds were trying to hold the 162 area. Look where we are right now. We have gone below 162. We're at 161.76 as of right now. And if you get really deep in there, you can see this was the low that we were looking at, that we were trying to hold. And we pierced it and got above it. And then on Friday, there was this jump up, but the bond market has actually sold off today, which is something a lot of people did not expect coming into this morning's market action. U.S. dollar is also losing ground as we're now down to that crucial 26.50 level that we've stayed above for quite some time since after the big jump up when everything was being sold and U.S. dollars were being acquired. We dropped back down and we stayed in that 26.50 to 27.50 range. Well, we just dropped below it. So is that possibly going to drop us back down to the 25 half, 26 half area? Again, it's going to remain to be seen. But if the U.S. dollar drops, that would support stock market prices going higher. Right? So we do have a little bit of division here in the major averages. Take a look at oil. Now, oil is actually acting kind of funny here because after Labor Day, what typically happens, all right, and let's back up here. So this is Monday, Friday, Thursday, Wednesday, Tuesday. Now, we haven't gone above Tuesday's prices yet and closed above Tuesday's open, but typically what happens and what's happened in the last 10 years, if we've seen a drop off in oil over the 2 weeks following Memorial Day weekend. That's a pretty good pattern. It's actually worked 8 of the last 10 years. Oil is lower 10 days later than it was on Memorial Day weekend. So take that for what it's worth, but I wanted to make sure that all of you were aware of that particular pattern because I wasn't around last week to talk about that with you. All right, but it doesn't look like it's gone very far since. All right, so that's the view of oil. All right, so stocks, bonds, currencies, commodities. Let's take a look at gold. And as you can see here, gold is moving higher today. And what you can see is, again, if we take ourselves back 100 days, beginning of the year, gold's trading at a tight level between 145 and 150. We break above that high. This was on just after Valentine's Day, right? And then we started this wide chop between about 148 and 158. That broke down. That breakdown didn't last for very long because, again, everyone was selling everything they could get their hands on and to swap out for U.S. dollars. All right. Then gold, as gold bugs realized this price came too far too fast, they then jumped the price. And immediately, within a couple of weeks, we're trading at new highs. We're trading up around 165. Now, we've been in this range between 158 and the 164, 165 level now since the middle of April. All right, so middle of April, middle of May, now 10 weeks later, and look where we are. We're at 163.06 as of this print. Trying to move higher, but again, you would think that after what happened in the market over the weekend, that gold would be a little bit more bullish. All right, I think what's really going to push gold to what I believe is some new healthy highs is going to be more acts by Congress, and whether those acts include more stimulus plans, more plans to help small business, etc. All of those involve, in one way or another, continuing to devalue the US dollar. And as the US dollar gets devalued, money will get put into hard assets like gold. Another area that money would be likely to fall into would be cryptocurrency. So take a look at, let me go to our crypto tools, and I'm just going to jump in to the charts, and I'm going to type in BTC so we can get a chart, a good look at Bitcoin. Bitcoin now is trading right around 95.76. If I work my way in here, an interesting thing has happened with Bitcoin, and it happened late Friday, and that was this little buy signal that came in. This is what we call a darknet buy. All right, darknet looks at long, short, and intermediate term channels, and I like this because it's actually buying on strength, and we've got some really good resistance up here. If you take a look where the resistance is, it falls right around the 10,000 area. All right, we've hit that once, twice, three times, four times. And so the market just really wants to, and off this coronavirus low. And look what this was. This was below 4,000. All right, we've rocketed up from 4,000 back to 10. And then we're creating what looks to be a triangle. Now, this triangle could be, you could look at it as a symmetrical triangle, or you could widen it out a little bit and look at a bullish triangle. Either way, we're getting into an area of consolidation. And I got to tell you, typically when you get this kind of consolidation in this wound up situation that's going on here, it's likely to break one way or another. All right. And we believe, based on this and currency waves that we look at, that break is going to be to the upside. So that is Bitcoin, BTC. All right. So there you go. That's the overview. And if I were to just take a couple of minutes with you and show you what's happening on the intradays, let's do that real quick. All right. I'm going to jump to SPY. And, now typically I'll make these charts, I'll put 4 of them up here. But because I'm looking at our charts also in a window in which you see them, it's really hard to see 4, let alone 1. So I'm going to try to break this out and show it to you as much as I can. These numbers up here, and the red number you see that I'm pointing at right now, that's 304.51. All right. Now we have a first hour high at 305.09, and we've been above that first hour high for a good bit of the last half hour, but we've broken down since then, and we'll just see if that leads to further breakdowns. All right. This is SPY. The low for the hour is 303.06. Now, typically what I like to do is I like to measure this chart amongst 3 others. And that would be, again, looking at stocks, which is SPY, bonds, which is TLT, the US dollar, which is UUP, and gold, oil, which is USO. Let's take a look at TLT. This is the bond market. You can see here the bond market gap down. You can see the gap. Here's the close Friday. Here's the open this morning. Here's where we've traded. We've not broken the low or the high yet. However, if I get inside here and open this up even more, you can kind of see where we are. Low 161.67 for the hour, high 162.16, and we're sitting really close to right in the middle. So the bond market doesn't know which way it wants to turn as of now. UUP, this is the US dollar. It did break down and get into negative territory for about 15 minutes, and now it's climbing out of that. And as we're now back to 26.50, okay? High for the hour, 26.55. Low for the hour, 26.48. Again, you might say, Tom, there's only 7 cents between the high and the low. That's true, but you got to remember, this is the US dollar, and this is the double dollar index. This just shows you how stable the US dollar is when it trades through a daily chart, all right, but being our US stock market hours. USO, all right, we had a high of 26.43 on Friday, and as you can see here, we are down on the day, but only down about 9 cents, all right, so we opened right down in this area. We took a first hour opening low at 25.56. The opening hour high came right around 10.15, and that was 26.06. and we're smack dab in the middle here too. So what we've got is we've got 4 charts that intraday do not know where they want to go. All right. So what I like to do is look at these throughout the day, and as we get into and out of the lunch hour, these patterns start to make a little more meaning to me as they are trending patterns for the day. All right. So let me just check our comments out real quick as I'm looking along. We're going to talk about Hertz. And so any of you that got comments on here on Hertz, just keep in mind, I'm going to go through some ideas on what's going on with them. Good afternoon from Belgium. Melbourne, Florida is in the house. I got a lot of Florida in the house here. I'm in Florida right now. You know, I typically take my summers and I jump to New York, but that's just not going to be the case right now. And I'm not in the city, guys. I'm upstate, so it's not. It has nothing to do with what's going on with the protests or the rioting. What it has to do is it has to go on with what's happening in with COVID-19. And so it's starting to spread a little bit more in some of these more rural areas. And so my wife and I have just kind of decided we're just going to hang out. Wait. Hello from Kennesaw, Georgia. You know, Larry, I grew up in Woodstock, Georgia. Part of my time was spent in Woodstock, Georgia. So I'm sure you know the area very well. Went to Kennesaw University. Great place. That's my stomping ground, buddy. James, you're talking about Ethereum. And Ethereum actually had a really good move last week. I own Ethereum. I've talked about it before on here. And so, you know, that's exciting. See what we got also going on. Boca Raton, great to see you. Las Vegas. Melinda, thank you very much for the comments. And Navid says upstate New York. That's where we are. We spend summers in upstate, and you know, I'd love to get out to New Zealand because I got a place out there too, but I can't get out there. It doesn't look like they're going to let me in until September. So anyway, guys, great to hear from all of you. And let's talk about bankruptcies. So you know, I mean, finding opportunity. Let's just discuss this for a moment. And for those of you that that just joined in a little bit late, I did a YouTube video on this. All right, and I'm actually I'm going to post a link out here for you one more time. So I did a YouTube video out there, and you guys see it there. And so it's just based on what happened last week and all the news. And Hertz was all over the place last week. All right. This was Friday before Memorial Day was when they filed for bankruptcy protection, not Friday as a couple days ago. And so if we look at some fundamentals and some technicals, let's also look at opportunities as a stock trader as well as an option trader. So let's talk about the fundamentals first. And the fundamentals are, this is all the kind of news that was being talked about. They're not paying their landlords for 6 months. The fleet's losing value. Obviously, car prices, both new and used car prices, have dropped considerably. In fact, used car prices, I think, were down like 15 or 20% after what's happened with COVID-19. People are just not driving anywhere right now. They're staying home. There's obviously Hertz has to reduce its fleet. Hertz probably has a program, and I don't know it yet, very similar to Enterprise, where they actually sell their cars off the lot. I know Hertz sells their cars to dealerships, which then turn around, put them in their used program. But I'm sure dealerships right now are not taking a lot of used cars simply because their lots are probably full. Here's an interesting one. $16 million in bonuses went to executives days before filing the bankruptcy. Not really sure what to say there, except shame on you if they saw it coming. So the big question on everybody's mind is should I buy Hertz? Is this one worth taking a look at? And of course, last week, it was trading. It look what ended up happening. This is a stock that in February was at $20.85. Before the bankruptcy, it was trading above. It was trading around $3. Then it dropped to 40 cents, and that particular day it jumped and closed at $1.31. Since then, it's fallen back below $1. So let's talk about odds and probability for a moment. Okay, odds and probability. This is statistics, outcomes, and future likelihood. So think about odds for those of you that are not math geniuses, and I don't claim to be. All right, so let's get that out in the open right now. And in fact, one of the smartest people in the world that I go to is my son, and you know, it's hard for a father to be wrong when he's debating with his son. But you know, my son's a math genius, so he knows a few things. And but I could tell you this. I know the basics of what it takes to succeed in the stock market. And so you think about probability. Probability drills down to this. If you flip a coin and you keep flipping a coin, the overall chances of heads to tails is basically 50-50. So the odds. So if you expect to win 50% of the time, odds are that we put up $1 to win $1. And that's no truer than with Hertz trading at $1. If Hertz is actually trading at $1. So this is an example of what you look at, or what we look at, when it comes to odds and probability. Now, lucky for me, I don't really need to have any Nobel Prize mathematical equation, because it's all built into what I look at with our software. And so this red line would represent what's called a standard deviation. All right, a standard deviation is no more than a percentage chance that the stock's going to stay in this particular area in a given time frame, which this red area represents one standard deviation, which says that a stock going forward randomly would stay in this range 68% of the time. It balloons out to 95% of the time when you look at the second standard deviation. And the third is 99% of the time the stock would stay inside this cone, all right, during this time frame going forward. Now, what we see next to us is a probability graph. And when you look at this, you might say, well, what does this say, 90% chance? No. This is the stock price. So if a stock price is trading at, let's call it $70, all right, the chance it gets to 90 drops, just like the chance it goes to 50 drops, right? The chance of a stock staying where it is or being range bound is much greater than it jumping up or jumping down in a set amount of time. All right, let me back that up again. So if the stock's trading at 70, it has roughly a 50% chance that over time it's going to be at 70 or slightly above. All right. So when you hear about a stock tomorrow has a 50-50 chance of going up or down, well, it's based on standard deviation graphs. And that's basically it. Okay. So let's look to buying 1,000 shares of HTZ, which, by the way, Janie, you can do on Robinhood. You can buy stock on Robinhood. And so if you have a conservative outlook, and let's say you're conservative. Now, let me get this out here again. I'm not advocating that Hertz is going up. Let's get that clear. I said that in my video. I'm saying it here. All right. I'm simply saying that if you're going to buy this, if you're going to do any strategy that I'm going to talk about here in the next few minutes, you have to believe the stock, for one reason or another, is going to be higher. And it may be at the end of the year. We'll use an end of the year forecast, not end of this week, end of the year forecast. What could make Hertz go higher? They could get a bailout. Somebody could come up into the table and potentially buy the stock, all right? And it could force the stock higher, all right? What could make the stock go lower? Well, that could be that they don't come out of bankruptcy and the stock price drops. And then there's a third equation. And the third equation could be, what if Hertz does go down, does get out of bankruptcy, but they still push the stock price down and the stock goes pretty much delists, and then Hertz does a new offering under a new stock symbol. What happens to the folks that are in the old stock symbol? Well, they're SOL, okay, for lack of a better term. So you have to believe that it's going to go higher, and you have to believe it's going to happen under the same stock symbol. And if it does, maybe your outlook would be a double. All right. So if it's trading right around $1, cost $1,000 for 1,000 shares, your risk's going to be 1,000. Your double would be if it reaches 2, if you bought it for 1. Your reward to risk ratio would be 1 to 1. That's $1 reward for every $1 risk. And that's the risk of it going to 0, which is highly likely. Now, buying call options is a different way you can be bullish, which you can also do in your Robinhood account. All right. You can buy call options. So when you go to Robinhood, and I have a Robinhood account, let me look real quick. It's on my phone, guys. I don't use the Robinhood desktop account, but I use the Robinhood phone account. And I have a small account with them just to see what it's like. My son told me you need to check this out. All the millennials are doing it. If you go and you want to trade something on Robinhood, there's a button that says trade. It says buy, sell, and it says trade. It'll say options or trade options on it. Buying calls gives you the right to purchase the stock at a strike price. There are different strike prices for stocks. There are different expiration dates for stocks. If you buy options, you pay a premium. You don't own the stock, but you have a right to acquire the stock if you buy calls. The reward's unlimited because there is really no upside until expiration. And your cost and risk is what you pay for the option. So if I were to look at options on HTZ, I've got them here. Here we go. I actually got them set up and ready to roll. Let me update this. So here you go. And Hertz is hurting again today. Let's not look at a 4-day outlook or 11 or 18. We're going to look at a 220-day outlook. We're going to look at the end of the year, which at the end of the year, the closest options are the ones that expired January 2021. So if I've done an update on here. So let's take a look and see what's being offered at what price. Well, the January dollar calls are 33 cents. That means if I were to buy, if you were looking at buying 1,000 shares of Hertz, all right, the equivalent would be 10 call options. 10 call options, each call option is good for 100 shares of stock. So if I look at a risk graph, this is going to tell me everything I need to know about this position. I'm going to pay $33 per contract or $330 for 10 contracts if I bought it for 33. My reward is unlimited because we don't know where it could go up, but we do know where it could go to the downside. It could go to zero. And if that's the case, I could lose the entire amount of the option. But in this case, I'm only losing a third. But here's the problem. I have to get to $1.33 by January 15th, 2021 to break even. So I got a lot of time to be right. Have a lot of time to be right. And here's my risk graph. And the risk graph is now, all of you should be familiar with what the stock does in a stock chart, but maybe not all of you know what this is. What this means is that if the stock keeps going lower and lower and lower, the most I can lose is that $33 per contract or $330 total. Now, if the stock goes higher, let's say the stock goes up to $1, back up here to around $1.50. It was $1.49 last week. I can move my mouse over and I can see the red line represents today. And what would today do for me? Today says I got a chance to make $460 to $500 on the trade if it jumps today. If it takes 75 days, I could still be walking away with maybe $400 on those 10 contracts. But if we go to $1.50 and it takes us until January 2021, then I'll make somewhere around $150 on the position because remember, I needed to get to $1.33 to break even. But that's an expiration because all these other lines here are theoretical and they give us the idea of the extra time that you're buying. Because an option, when you buy an option, you're buying time. Okay. Now there's one more way you can do this. It might cost a little more money. And it's something that, a lot of people just aren't looking at doing. It's something I don't talk about a lot, but I do talk about it every once in a while. There's always an exception to rules. Okay. And it's talking about getting paid to trade Hertz. Now, getting paid to trade Hertz would be selling puts. And selling puts would obligate you to purchase the stock at the strike price. Now, you get a premium for this obligation. Your position is unlimited all the way to zero, and your reward's limited to the premium received, but it comes with a high probability of profit. Now, let's take a look at puts, and let's put that into perspective with this particular stock. So if you take a look at Hertz, once again, I'm going to bring up the option trades and look over here. This is the $1 put. Now, the $1 put's going for, guys, last week, this thing was going for 65 by 75. What's interesting is the stock prices dropped and the put prices dropped too. So the puts were even more expensive last week because I think a lot of put traders realized, wait a minute, these are too expensive. And some of you got to be looking at this saying, is this for real? Are you telling me that I'm going to get paid 63 cents, perhaps, to obligate myself to buy a stock at $1. Yeah, that's entirely likely. I'm going to take off the 10 here, and I'm going to put a 10, a minus 10. So if I sold 10 puts of the Jan 2021 10 puts at $1, what's that going to look like on a risk graph? What's it going to cost me? Well, here's what it does for you, okay? You put $630 or $63 per contract in your pocket. Now, that would obligate you to buy 1,000 shares of this stock at $1 a share. So again, just like the stock trader, you're putting $1,000 at risk. But wait a minute, you're getting paid $630 to potentially put that 1,000 at risk, which means your real risk is only $370. Because guess what? If this goes down and you get put this stock at $1, you've got 63 cents in your pocket to help you pay for that dollar, which means where's your break even at? Right there, folks. Your break even on Hertz at the end of the year is 37 cents. Now, how many of you in here, as I'm rounding this out, may be a little bit lost on this subject? And you're trying to figure out, wait a second, what did he just say? What does he just say? What is he telling me? That I'm going to get forced to buy the stock. All right. So some of you in here might be running into that situation. If you are, I understand. All right. I have a lot of information that's out there. PowerProfitTrades.com is the place that you can go to get information on what's called selling puts. All right. It's not something that I do a whole lot of, but there are exceptions. And I'm showing you this again. Let me just kind of finish up here by talking about this, what we see here. I've got a kind of a summary sheet for you on this whole thing. So here's a summary. There's a high probability that Hertz will not come out of Chapter 11 and be profitable. There is a high probability of that. Do you know why? Because look how much the option traders are willing to pay you to potentially take Hertz at $1. Okay? They're saying we're going to give you 63 cents to obligate yourself by the end of the year. That tells me that by the end of the year, option traders, the put option traders, believe that Hertz is more likely to go bankrupt than not, or more than likely to be down below $1 than not be above $1. Okay? So what if the stock falls? What if the stock falls to zero? What if it gets delisted, HJ? What happens? Well, you're obligated at $1, so you basically end up being forced to buy it at $1, and it's now worth zero, but you got paid 63 cents. Okay? That is again, I've shown three things here. Most people are buying Hertz right now that believe it's going to go higher. They don't have a clue how to sell puts. Okay. When you get paid the 63 cents, immediately upon trading it, you get that gets credited into your account. Now you can buy the puts back if you want to. Okay. And by the way, guys, there are dozens of ways you can play this. I'm showing you the basic three. On the bullish side, buy the stock, buy the call, which is low probability, by the way, but the lowest risk. Not quite the lowest risk, because you could sell the puts and you're going to have a little bit higher risk, but you have a higher probability too. And let me just show you that one more time. If you look at the calls, here's the call options once again. Remember I showed you $33. If you bought 10, they'd be $330. Now take a look down here. This is the statistical, because I have all this data. The statistical probability that you're going to be right is less than half. It's 43% that you're going to be right. Okay? That's the percent to double. Now, take a look at that versus the put options. If you're selling the put options for 63 cents, you're obligated to buy that stock, but you have a 63% probability of being at break even or better. All right. Why do people sell puts? They sell puts because of one of two reasons. Either they want the ability to buy the stock at or below the stock price, or they want the income because it comes with high probability, or maybe it's a little bit of both. Okay? So, ladies and gentlemen, I want to thank you for being part of my Monday morning midday report. Hope you enjoyed it. Hope you found it both a little bit of entertaining, but mostly educational. And look forward to seeing you again back here this week. Until then, if you want something to chew on, I gave you a video. It's in the link in the chat box, number one. Number two, you could go to powerprofittrades.com, take a look at all of my articles. They're free out there as well. And of course, we have some premium services to offer you if you like to get alerts from me. All right. Thank you very much. Have a great rest of your day, rest of your week. I'll see you again next Monday, same time, same channel. Talk to you then. Bye now.